Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've been having a bit more of a look at the housing market in recent times. Current conditions, maybe some small changes coming through, but still not a lot of shifting across the board. Still a lot of, I guess, water to come under the bridge. You've got interest rates that are falling. That will have some implications for next year, but right here and now, how is the New Zealand housing market going?
Yeah, obviously those drops in interest rates that we've seen through since August with the Reserve Bank cutting the official cash rate and that flowing through into particularly fixed mortgage rates, that has starting to have a little bit of an impact on the market, and certainly the cuts have occurred sooner than and been sharper than we might have previously been anticipating. House sales for the latest month we've got, October, they were at their highest in around about 18 months. So they have lifted. It's not to say they're high, but they have just sort of popped back up after stagnating through much of 2024. We had a bit of a rally in the market through 2023, and then after that, the market has sort of softened again for an extended period of time. But just signs in the latest month or two that things might be starting to track up a little bit. Now, sales tend to be the first thing that turns around when we look at the movements in the housing market. Prices and the length of time or days to sell on the market do take a bit more time to turn around. And certainly when we look at prices, there's not a lot of reason for property owners to get particularly excited about the strength of the market yet. The month-to-month changes are still showing that house prices are edging downwards. They may be looking to stabilise over the next few months, but no signs certainly of them starting to head up yet. I think that's another step or two down the track yet.
So really what you're saying, so we've got higher sales. Yes, there's a little bit more activity out there in the market, but prices sort of fairly subdued for the moment, edging down. But I guess the broad sort of trend there is that the housing market's still moving sort of sideways-ish, a little bit more on the up for sales, not all that much changing on the pricing side. I think also we're starting to see, there's still more listings that are coming onto market. It's just those gains aren't sort of as massive month by month, maybe not as many people that are feeling the need now to put their homes on the market now that interest rates are heading down and they can sort of see the shoreline a little bit more. But again, still a lot of options on the table, still about sort of, I think it's half a year's worth of stock for sale to move. So enough options out there. And it's always interesting, you listen to the car radio and there's always real estate agents saying it's the best time ever to buy. It's a good time because, sales are starting to edge up and there's some more competition around the corner. Are we actually starting to see that? Is there any sort of signs of things sort of peeking through that are going to support maybe better or stronger house price growth next year? Still don't think it's going to be rocket ship to the moon, right? But maybe some early signs?
Yeah, well, I mean, you mentioned those listing numbers, and at the moment there is still a hell of a lot of choice for buyers out there. I mean, the listings are at their highest in 9 or 10 years. They've been tracking upwards pretty consistently for the last 15 to 18 months. And so, while there is a lot of choice for buyers, therefore they don't necessarily have to bid the prices up, and that is reflected in the price outcomes that we're seeing at the moment. Looking forward through to 2025, though, pretty much across every forecast that you can find out there of house prices, people are expecting a bit more momentum to start coming through as interest rates continue to come down, economic conditions improve, and people start to have a bit more confidence about committing potentially to taking on debt. What is one of the interesting things that we have seen over the last few months is that in terms of where the lending growth is starting to come through, I mean, again, it's not strong numbers across the board, but when we look at investor lending, the total value of lending to investors or new mortgage lending to investors over the last year has risen by 50% when we take the 3 months to October compared to the same period in 2023. At the same time, what we've seen is actually lending to first home buyers stagnating. So that's just a bit of a softer part there. And other owner-occupier lending is also reasonably soft as well. But the investor numbers do surprise me a little bit because when you look at rental yields and the income that you can generate from a rental property, it still looks pretty poor. And okay, interest rates are coming down. It means that your servicing costs and the sort of what else could you do with your money, put it in the bank and get some interest. Again, the returns on that are maybe not as attractive as they were, but it still doesn't look to me like, as a property investor, you'd be jumping in and going, yeah, now's a great time because there's money to be made. The question does come, I guess, partly around to expectations of what house prices and capital gains will do. And if you're an investor and you've got the belief that property prices might go up 10% next year, well, that's money for jam in a sense. Even if you do have to top up the mortgage in the meantime, you've got that sort of tax-free capital gain along the way. So it'll be interesting to see the way those investor numbers pan out. But like I say, all forecasters are picking house price increases next year of somewhere between 5%, pushing up to possibly even getting up towards 10%. So there is a feeling that as those interest rates do continue to track down, you will attract more buyers into the market and start to see a bit more competition for properties. The only other sort of influence possibly moving in the other direction, of course, is the fact that net migration and population growth is slowing. So that potentially means the sort of pool of buyers going forward is not expanding as quickly. But at the moment, when we look at the housing market over the last 3 or 4 years, there's been this big decoupling between population growth and the performance of house prices in the housing market more generally. Interest rates have been the predominant driver, and I think there's an expectation across pretty much everyone that still through into 2025, that dropping interest rates, the dropping mortgage rates that we're seeing will continue to be the primary driver of the market. Maybe not as strongly as in the past, but still being the predominant thing that will push those house prices up a bit further.
And I mean, just going back to that investor point, it is interesting to sort of see that level of interest, given that you're right. I mean, some of the fundamentals for investment don't look amazing. And like you say, you talk about those returns. I mean, rental growth in Auckland and Wellington rents are actually dropping in some of those areas. But perhaps a few more people are able to drive a bit more of a bargain when they're buying something. So again, that their sort of implied yield that comes out the other side is a little bit better. But still, a lot for us to look through, given there's also been still a lot of construction in the last couple of years, and some of those homes are only sort of hitting through in recent times. So a lot there. Also interesting from some of the same sort of lending data you were looking at. It was interesting to see in October a bit of a shift around, a lot more new fixing going on for a lot more lending going for just floating rates rather than sort of fixing for any sort of term. People obviously wanting to wait for that November monetary policy statement. But also quite a large proportion also fixing for 1 year, which does seem to make a bit more sense, given that sometimes that 1 year and 2 year number didn't look too horrendous actually compared to the likes of your 6 months. In fact, sometimes a lot better depending on your outlook for interest rates. So again, quite a lot of movement there. Some people trying to sort of fix in before things sort of change around a lot more, but still quite a lot of action happening in the housing market. Some ups, some downs, but some expectations of further growth, particularly in prices next year. We'll continue to assess how all of that goes, how the housing market performs, what prices do, and just how much investors do clamber back into the housing market on one of our future editions of Econ Talks.